Welcome to another video. My name is Tom and let's talk about the Airbnb IPO. 2020 was a shitty year, everybody knows that, but not for the stock market. The stock market went ballistic. In 2020, we already saw $140 billion raised in over 380 IPOs. That is insane. But we're not done yet. There's 2 more IPOs coming up this month. Usually you don't see a lot of IPOs that late in the year, but with how boiling hot this market is, it doesn't really matter. It's still gonna do well based on everything we know. But in this video specifically, I want to focus on the Airbnb IPO, to go through the company, to go through the 5 elements I look at, which is the business model, the management, the moral compass, the financials, and what I think about the company as far as long-term investments. We don't do day trading, we don't do swing trading, and beyond that, this is just for entertainment purposes. This is not my advice as far as you going and investing based on what I'm saying here. This is just for fun. I'm just sharing my opinion. Might be wrong, might be inaccurate. Do your own research, blah, blah, blah. Let's get started. Now, based on the S1 file to the SEC, we know that Airbnb is targeting a $30 to $35 billion valuation, which is a big amount, especially considering that it's almost double than what was originally anticipated. Now, it's a huge leap, and I know that the optics are not great, especially since Airbnb took a 39% dip in activity during the pandemic, but I still think it's a great opportunity, and it's still undervalued as far as long-term investing. Let me show you why. And as always, let's hit the financials. You know we like going through the financials. It's one of my favorite things to do. Let's go straight to the financials. I mean, we can go through the prospectus summary. It's actually very interesting. This company has a lot of interesting stories. I'm a big fan of what they do, but let's get to the financials. Okay. So first of all, let's look at the balance sheet. The first thing I want to see is what's in the cash register. Now, this is in thousands, so it means they have 4.5 billion of cash. They have plenty of cash, plenty of runway to run their business without being concerned how to pay salaries. Like that a lot. Now, if you take a look at the total assets, it's 8.7 billion and total liabilities 6.8 billion, which is also a good sign. It means that in case they somehow magically need to repay everything they owe in a single day, they have plenty of cash and assets to get it done. It means they're solvent, they're actually more than solvent, and it actually shows me that this is a healthy financial management company. Impresses me. Now let's take a look at revenue. Now, as you can see here, these are the first 9 months of 2020. They obviously took a COVID hit, so you'll see the number here is lower, but what I like to see here is the trend. So this is all the way from 2017, 2018, 2019. So 2.5 billion, 3.6 billion, 4.8 billion. You can see the trend. You can see they're generating more revenue exponentially year over year. I like that a lot. They did slow down in 2020, obviously. However, this is a pandemic year. We can't ignore it. We know this, and this is probably one of the reasons that this is a bargain right now. Because at $45 to $50, that's based on these numbers. And a little bit of an upside, but I mean, it's not fully priced because of that hit. And we know it's temporary. At least that's what I think. They still have a lot of issues with net profitability, but as far as gross profitability, they're very good. 650, 860, 1.2 over these numbers. It's a very high gross margin. And that's great because cost of revenues is one of the hardest things to bring down. These guys have it in control. However, these are all the associated costs which are not cost of revenue, which is the R&D costs, the sales, the G&A, the support. All of that stuff is actually what's preventing them from being profitable. Because if you look at income, as far as net income goes, they're bleeding money. We can't lie, we can't ignore it. They lost 501 million in 2019. Outside of this small spot in 2018, where they actually profited 18 million, they're losing money. And it's the same thing for 2020. They're about to lose a lot more than 500 million. So they're not profitable and they're not close to being profitable, but they're on their way. And let me show you what I mean. I'm thinking that this is part of their strategy to grab as much market share as they can, because it clearly shows that from the numbers. Their biggest expense is marketing and sales. A lot of money is going into that. They're trying to grab market share for actual future profitability. I get it, and I'm fine with it, especially with the fact that they're investing a lot of money into R&D, which is also something I'd love to see. They invested 976 million into R&D in 2019. That makes it into a software company, not a hotel company. That's what I love about it. Okay, and let me show you my DCF. Of course, these are my assumptions as always. As you can see here, we have the tax rate, the discount rate, 12%. I always use a high discount rate, even though it weakens the valuation because I want to be cautious. A 25x multiplier for tech companies, a share price of $50 anticipated, 600 million shares of the company outstanding, 4.5 billion in cash. Here we have my anticipated cash flow as far as the EBITDA minus tax and the tax credits right here. And this is what I see, 32 billion. I'm not going to go through this entire calculation. This isn't a DCF class. This is just for entertainment purposes. I want to get to the bottom line. So I see the company valued at about 32.5 billion, giving it a target price of $54. So for me, a good entry point would be anything below $54. Now, this is my opinion. You might have a different opinion, and I'm fine with it. Actually, if you want to put it below in the comments, I'd appreciate it. And here's my bottom line. Do I think Airbnb is perfect? Is this guaranteed to work? No. Airbnb has its share of problems. Just to name a few, there's regulatory issues. A lot of countries are going to put up a fight to protect their hotel industry. It's just normal. They're going to get cock-blocked in a lot of countries. Also, they have a weird and funky compensation for executives other than the CEO, which are not linked to the share price. The CEO, which we'll talk about in a second, has a directly linked compensation to the share price, much like Elon, but some of the other guys have a very funky compensation structure, which I don't like. There's other things that are not really profitable consistently, which is also a concern. But given all that, when you take a look at the actual fundamentals of this company and you take a look at the future, what you're looking at here is an opportunity because this is the most innovative and disruptive company to ever hit the travel industry. And it's going to revolutionize the hell out of it. And to miss out on that investment is a huge mistake. Now, what is Airbnb anyways? In case you haven't heard about it, very simply put, it's a platform that connects hosts to guests. If I want to rent out my bedroom for a night, this is how I do it. If I'm looking for a place to stay in New York for 2 nights and I don't want to splurge on a $400 a night hotel, this is how I do it. The platform provides a meeting point for these two individuals and collects the fee from both. Simple, elegant, and highly effective. Now, Airbnb started in 2008, and until 2011, it was purely a US-based company with no global presence. Now, a funny story, the way this company started is actually very interesting. 2 buddies couldn't afford rent, so they offered to let people sleep in their apartment on an air mattress per night. And that's how this whole thing started. It's a great foundation story, and it means a lot about what the company is and who the founders are. Just to give you an idea about the founders, the original founder is still the CEO. Brian Chesky is the guy who's already a billionaire, but he's been there from 2008 all the way to now, and he's not going anywhere. And it's one of my favorite things about this company because if you know me, you know I love original founders who remain the CEOs. That's one of my favorite things, and I love that about Airbnb. But to go back to our story, in 2011, this actually became a global operation and never looked back. Airbnb currently has over 5 million listings, over 200 countries, over 150 million users. If you consider the network effect of this thing, there's no room for a competitor to ever try and reach them. They're like the Tesla or Amazon of the travel industry. They're too far ahead. Catching these guys at this point is the equivalent of climbing Mount Everest naked with a 10-foot pole trying to hope things will be alright. It ain't. It's gonna end badly for you. So I don't see any competitors coming out. This is a very disruptive, innovative, and bright futured company. That is why I see Airbnb as one of the most innovative companies in the world right now, specifically taking over the travel industry. Nobody's gonna catch these guys. But why are they so successful? Why are they growing so fast? Well, simple. They're the best alternative to the hotel industry as we know it. It's cheaper, simpler, more flexible, and more COVID-proof. Instead of me walking into a hotel with thousands of people, I get to seamlessly walk into an empty apartment, live my 3 or 4 days there, leave, make all the transactions on my phone, never meet the guy who rented the apartment to me, completely COVID-proof. Everybody got struck by COVID. And the hotel industry, Airbnb, are just as affected. However, the hotel industry is never going to recover, much like the airline industry. it will never be the same. But once the smoke clears, you'll see that Airbnb is not only going to remain standing, it's going to come out victorious because it's COVID primed. But here's the thing. COVID and the pandemic actually changed patterns. It changed the way people think about money, about travel, about work, about everything. And none of it is ever reverting back, even after we beat COVID, whenever it happens, God willing. Here's the thing. You have an option here, which is an alternative to a hotel. It's cheaper, it's more flexible, it's easier, and it's safer as far as COVID. You don't have to stay in a place with thousands of people. It's seamless. You pay on your phone. You never meet the host. You come in, you stay, you leave. It's much primed for this new society of social distancing, unfortunately. That is why I see a huge potential in this. But here's the thing. This whole pandemic is actually an accelerator of trends that were bound to happen anyways. As far as electronic payments, lack of travel, working from home, these are all things that were bound to happen anyways. This pandemic just accelerated it, and that is exactly what makes Airbnb a huge opportunity. We're buying it during a pandemic after a 39% decline. If this was normal times minus the pandemic, the price would have been much higher because unlike DoorDash, for example, Airbnb was about to disrupt the hotel industry anyways, regardless of the pandemic. This whole thing just accelerated the process in the long term. That's my opinion. You're welcome to dispute me, but that's how I see things. And you know what? I like the concept. I like the morals. During a time of crisis, during a pandemic, it puts money in people's pocket. According to all estimates, it generates about 700,000 of jobs by hosting just by being there. Jobs that would have never existed without Airbnb. And you know what? It's a nice side hustle to have. For some, it's actually a full-time job. It's a way to make money without harming anybody. It's a win-win. One person gets money, one person gets a bed and a breakfast. It's a win-win. They're not harming anybody. They're not creating any dangers. I love their business model and I love their morals. And you know what? Even though they have a funky compensation structure as far as all the other executives, I love the CEO. Brian Chesky, born in 1981 like me, only much richer than me, is a guy who came from modest background. Both of his parents were social workers. He didn't come from money. He made it all himself. And the whole idea about how this company started 12 years ago is phenomenal. He couldn't pay rent, like a lot of people in New York. So he decided to buy an air mattress and rent it out. Genius. And I love these foundation stories that come from a need, from a necessity. I love it. I love CEOs who are the original founders who stick around despite being filthy rich. This isn't a Trevor. This is a freaking winner. So all in all, given everything we just saw, I think Airbnb is going to have a great IPO. And I think for you guys, it's an interesting opportunity to get in early. I think for me, this is a long-term play over the next 2 to 3 years. I think over the next decade, they can go 3x, 5x. It's a long-term play. It's going to take time to transform the way people behave. The hotel industry isn't dead yet. It's going to be a slow phase out of hotels and phase in of Airbnbs. It's going to take 3, 5, 7 years. These are slow processes. This isn't for swing traders or day traders. It's a long-term investment. And as such, I personally really like it. I might buy a few shares. I don't know yet. Let's see what happens on December 9th. Thank you so much if you're a channel member, if you're a Patreon, if you bought our merch. I so much appreciate you guys. I'll see you guys in the next video.